Hey everybody, Boris Lasberg. Welcome to the Calm Dollars for September 19th to September 23rd, 2016. Aussie dollar, dollar CAD, and Kiwi dollar. Interesting week in the Calm Dollars because in many ways the high yield has performed a lot better, I think, than the majors certainly did. Certainly the European currencies did against the dollar. They've held their bid more or less better, primarily because, of course, on the yield differential they still are much more attractive. And although U.S. yields went up, they didn't go up in a vertical fashion, which would have created a lot more profit taking out of these two components. And I think that's really going to be the big story next week, just how strong a message we're going to get out of actually a slew of central banks, not just the Fed, but of course the RBNZ and the RBA itself, in terms of their impact on the yield curves of all of those countries and how those currencies should perform. For now, they both look, actually, even though they kind of ended the week on a weaker side, they both look more like interesting shorter-term buys than they do longer-term sells, in the sense that they are coming now into what you could consider to be value levels. There is strong support in the Aussie at the 74s. There's strong support in the Kiwi at the 72s. The Loonie is its own story, of course, driven by whatever happens to oil and the weakness in the Canadian dollar. The interesting thing, I think, here, in many ways, in my opinion, is that if the Fed comes in sort of uber hawkish, it probably is going to have an impact, the worst impact on, or medium hawkish. Let's say sort of take I think, the most conventional scenario, which is the Fed comes in. Let's say that there are three scenarios in the Fed, right? We have the first scenario is that they are uber dovish, which means that they suggest not only no cut, no hike in September, but possibly no hike in December. That really sends, I think, Aussie Kiwi into the stratosphere because they then remain very much the yield plays all the way to the end of the year. We could go right back towards the 76s. That's why sort of playing the uber dovish trade really presents a very interesting value opportunity to buy both Aussie and the Kiwi at these levels right now. The intermediate scenario, the one I think is most conventional, is they come out and say, we're not going to do anything in Sep, but we're definitely going to do something in December. So that still buys up a little bit of time for the high yielders, but they're definitely going to suffer, and they probably are going to break those support levels just on the dollar strength alone. And under those conditions, dollar CAD probably takes out the 133, but not goes much further higher. Now, if we have a super hawkish statement, I mean, as a matter of fact, if we have a statement where the Fed actually hikes rates, ironically enough, I actually think the high yielders suffer the most, not because they are the weakest, but because there's going to be the biggest potential for profit taking. There's just going to be if the Fed raises rates, it completely changes the yield curve differentials across the carry trade spectrum, and therefore could just unwind a massive amount of carry trades against the dollar, and therefore take the Aussie right down to maybe 72s, take the Kiwi all the way down to a 70-100. So it's kind of interesting that these guys who are still have the highest yield in the industrialized world could suffer the most on an uber hawkish dollar move. How this plays out, of course, remains to be seen, but these are the possible scenarios we should be thinking about. For the near term, what I think is interesting from just a purely technical point of view is, in fact, that, let me just get to the charts here. Let's start with the Aussie. And I'll just do the support resistance here on the charts, because you saw the support resistance over here. Let me just go back for just 1 second just to give it to you. It's 76.74 in the Aussie, 133, 130 in the Caddy, and 74, 72s in the Kiwi. But let's just take a look at this in more detail on the charts, and you'll be able to see it with greater clarity. So 74.50 is the big support here in the Aussie, and I'm sort of calling it 74 just because, of course, it tends to run right below, right underneath this, these levels. But this 74 support, very critical. We break below there. This turns the whole Aussie trade from a mildly bullish, bottom of the range kind of a trade to a big distribution move here with potential unwind all the way back down to 72.50, maybe even all the way down to 71.50. So and of course, a bigger failure here off the highs over here. So that's why this is a pretty good support. But at the same time, the fact that we may have a more dovish scenario out of the Fed than people realize provides us with kind of a very interesting opportunity to catch this at a low valuation level and then potentially have a big move back up. Still, Aussie is, if nothing else, just simply range bound. This is a lower end of the range kind of a trade. A true big move in the Aussie would be a move above the 77.50, would be a breakout that would challenge the highs. We're very, very far away from there. And if you look at it on a near-term basis, we're sort of really in a mild distributive pattern with lower series of lows. So pop here may not last very much. That's why I caution you to not get too excited about it. But at the same time, a pop here is very much possible. A break to the downside, though, definitely augurs, I think, lower prices, and therefore creates a very much sell the rally dynamic in the Aussie. In dollar CAD, what's interesting here in many ways is that technically we're really at a very much more important juncture than the other two COM dollars, because this 133, which is the big break, a strong pro-dollar move takes us above 133, puts us right back onto path to 135. That's a big, big move. We haven't seen that since well before April, and therefore puts the Canadian dollar into a very strong play. You know, ever since you guys been listening to my videos, dollar CAD on a dip has been my favorite trade. It's certainly not failed us so far. At this point, you know, it's hard to find a dip unless we get a kind of a mildly dovish dollar statement. The dip here, as long as we can hold the 29, is probably still going to be a very, very good possibility to enter. But I think at this point, we may be quite the opposite dynamic. If we break out above the 133s, then just any kind of a dip below the 133 provides a good anchoring opportunity for a move all the way out to 135. This 133 is going to be a very, very key break on the commodity level basis, and we should be watching the dollar CAD very carefully. And then last but not least, here's the Kiwi. The Kiwi had a big power move that had sort of unwound quite violently over the last 2 weeks from the 74.50 highs. We're now facing the RBNZ. Kind of interesting to see because you know, market is actually pretty hawkish. The RBNZ does not think the RBNZ is going to do more than another 25 basis point hike. So it'll be interesting to see how the reaction will be on Wednesday against that, especially after FOMC. So we, in many ways, you know, we have like a double whammy. We have, of course, the FOMC with whatever communication they're going to provide, and then right after that, the RBNZ. And we could have a super uber bullish situation where the Fed is very dovish, the RBNZ is not so much so, and we could easily go right back up to 74s and possibly even challenge the fresh monthly, the fresh yearly highs at this 74.50 level. So that's why establishing a long over here with a sort of a stop underneath the 72s could be an interesting pop if you're not a believer in the dollar hawkish trade that's been dominating the markets over the last 2.5 weeks. We are definitely at value levels in both Aussie and Kiwi, and it's going to be put up or shut up time for those two currencies. So I wish you guys the best of luck, the best of trading. The key levels to watch, of course, to the downside, 72s in the Kiwi, 74s in the Aussie, and this 133 breakout in dollar CAD. Very, very important to watch because a break above that really puts us on a path towards 135 on a very strong pro-dollar trade. Wish you guys the best of luck, the best of trading. Boris Schlossberg, over and out.